And we are back. The latest Carson's Take 5, Ryan and Sonu. Sonu, you got a haircut. I want to talk about that in a second. You look a lot different than when I saw you yesterday. You look aerodynamic. But listen, there's a lot of news out there. You've maybe seen it. The question about, is the stock market in a bubble? 1929. I'll set it up, Sonu, and turn to you. There's this big article going around Wall Street Journal, how now is like 1929. This particular portfolio guy, you'll get into the weeds of it, says we're going to rally a lot like early 29 and then crash. When you hear 29, everybody, that's right before the Great Depression. Stock market crashed, I believe 86% approximately. What's your take, Sonu? Are we in 1929 and are we in some major bubble right now?
I should say nobody's ever called me aerodynamic.
I'll tell you, I'm looking at you down there. You look a lot different than yesterday. You look good. Aerodynamic.
No, look, I will say this. It is very hard to pinpoint, are we in a bubble, even if we were. Mm-hmm. Now, to be clear, I don't think we're in a bubble. I'm sure you don't think we're in a bubble. So usually, like your best clue, and it is a clue. It's not a certainty, right? Because these things are hard. So are we in a bubble or not? Are things stretched, right? The market, the S&P 500's gained 25% two back-to-back years, 2023, 2024. And this year, it's up about 14% thereabouts while we're recording this. That's pretty good, right? Over the last 5.5 years, since the end of 2019, we've had COVID, we've had 40-plus highs in inflation. The Federal Reserve's taken rates from 0 to 5.5%. The market's gained, the S&P 500's gained 125%, Ryan. Right. So I'm not surprised the question is coming up. Like, wait, all this bad stuff is happening, and we got tariffs and all of that. Like, how can the stock market keep going up? One word: profits. Right? Profit growth is what's driving. Well,
profit growth is two words.
Anyway, so no, out of the S&P 500's 14% return this year to date return, about 65% of that, so 8 percentage points thereabouts, plus another 1 percentage point is dividends. 8 percentage points has come from profit growth, right? And this is forward-looking expectations for profits. What's the rest of it? That's what we call jargon, in our lingo, multiple expansion, right? We won't get into what multiples are, things like that. It's like when people are optimistic, and you do want some optimism, right? In the market, in a bull market, you need optimism. But people tend to pay more for future earnings. Right. Now, sometimes that can get very optimistic. Sentiment can be it can be overdone to one side, right? Right now, I'm not seeing that. Are things expensive? Yes. Are things in a bubble? I don't think so.
Yeah, you think about famous bubbles throughout history. You had the tulip bubble in the 1600s in Holland, where like one bulb of tulips was like the price of a house. Japan in the 70s and then into the 80s, the real estate in Japan was just so more expensive than literally everywhere else in the world. Of course, the tech bubble in the late 1990s. You could argue Beanie Baby bubble, baseball card bubble. There's been lots of them. But the reality also, Sonu, just last week, the Russell 2000, that's small caps. Small caps made their first all-time high going back almost 4 years. The transportation average still's not hitting all-time high. Mid-cap still really haven't hit all-time high. It's hard for me to say we're in this big old bubble when very significant parts of the United States, a U.S. market, that's when people are saying it's in a bubble, haven't even hit all-time highs and are just starting to. Yes, technology's had an incredible run. Where does all the earnings growth come from? Technology growth was up, profits up like 25% year over year. Last quarter's earnings. I mean, that's where the growth is coming from. So you got to pay up for it. Maybe that's a little frothy, but then you look around the globe, emerging markets are fairly cheap. Developed international is fairly cheap relative to the U.S. You can slice and dice this however you want, but the truth, again, things are a little bit pricier. But honest to goodness, Sonu, I remember last year at this time, we were saying, wow, stock market. We weren't. Other people were saying, wow, stock market's overvalued, this and that. We kind of show to keep this real high level. You go out 1 year, there's virtually no correlation between where multiples are to how the stock market does. Yes, you go out 5 to 10 years, they're potentially a little bit lower. If you start at a higher multiple, a little bit underperformance. But listen, to just blindly say we're in a bubble and this is 1929, I think it gets clicks. The Wall Street Journal likes it. This hedge fund guy, whoever he is, he's trying to sell some subscriptions, some newsletters. I guess it's working for him. But we understand, you hear that and you see it, it makes you worry. We're going to push back against that by this bull market's alive and well thanks to profits. So, no, we've probably gone about long enough. Anything else you want to add to that?
I would say it's not like there's froth. There could be froth in certain parts of the market. but that's why you want to be diversified.
Yeah.
This is literally what we wrote in our mid-year outlook, right? You don't have to be, in completely skewed in your portfolio towards any one single part of the market.
Yeah.
You can be broadly diversified. Like you mentioned, it's a global bull market. You have international stocks, small cap stocks, mid cap stocks across the board, right? That's what we're doing for, the models and portfolios we manage as well.
No, well said there. You don't, I guess the answer is you don't have to be all in Mag 7, right? The big tech leaders. Hey, listen, we have exposure to that area too. We actually are probably a slight overweight to technology, large cap. We still like it, but by no means are we over the top because that area has done well. You look around, there's some other areas that haven't done quite as well. Maybe those are the areas that can kind of take the baton as we head into, the next year or two. But listen, the reality is still a global bull market. I believe the time we're doing this, we had 28 all-time highs on the S&P 500. When the S&P 500 hits an all-time high in the usually tricky month of September, the fourth quarter has been higher more than 90% of the time. We'll talk more about the fourth quarter here coming up, but maybe buckle up for us some October volatility. That'd be okay. But big picture, everybody. This market's not a bubble. This market's not wildly overvalued. This is still a bull market. We'd still be invested, and we still are. With all that, everyone, we'll see you next week on the latest Carson's Take 5. Take care. Thank you.